It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to the Real Estate Breakfast, where we break down for you the Australian property market. Is there something that you'd like us to explore a little bit more deeply on? If you've got a question, perhaps it's an idea or a real estate concern that has really been bugging you, then email it through. You may even have a positive property story that is worth sharing. Like, have you just got into the property market? Are you a first-time buyer? Can you share that with other first-time home buyers around the country? Now, there's two ways that you can do this. You can either send us a voice message using the link below. We will get your voice, we will share it, or you can email us anytime. The email address, myrealestatepodcast@gmail.com. I don't know about your working week. It has been a drag, man, here. A very, very long week. I'm not sure why, but we are up to the end of our working week. It is June the 20th. And Swiss voters officially rejected a proposal to legally cap the country's population at 10 million by 2050. You might have caught up on this news in the past week. The political party wanting to bring change argued that rapid, uncontrolled migration severely strains public services, infrastructure, and housing availability. Doesn't that sound familiar? However, in the voting on this, a 55% majority voted no, prioritising economic stability. And Australia faces an identical dilemma as surging net overseas migration collides with an unprecedented housing supply shortage. Now, much like the concerns raised in Switzerland, rapid population growth in Australia has severely outpaced infrastructure and construction. While calls to drastically cut migration echo the Swiss debate, Australia's property sector remains heavily reliant on skilled foreign tradespeople and economic growth to build the very homes needed and required to solve the crisis. You could say it is a catch-22, but it's finding a compromise, I suggest, in the mix of all of that somewhere, because having the floodgates in terms of migration open across Australia is going to continue to stress out the property supply. You might have an opinion on that, so don't forget the ways in which you can get in contact. Let's right now go to New South Wales, where we are catching up with Kirsten Craze. And a very good morning to you, Kirsten. Welcome on to the Real Estate Breakfast. You are in mid-north coast of the New South Wales region. Having heard all of that, the Swiss, they didn't quite get that across the line, trying to just limit the intake of the migration aspect.
Yeah, it is very interesting to take a look at that example. Switzerland is a unique case, being that it's not part of the European Union, so they can kind of make decisions quite independently of their neighbours.
Yeah, it's one that's going to continue to evolve for sure for Switzerland, as it will here in Australia. Now, regional property. I know that you like talking about regional property around the country, and you're also tasting it where you are.
Yeah, look, I do divide time between Sydney and the mid-north coast. I think that it's really, obviously COVID has shone a light on regional property across Australia. Perhaps difficult for people to pick up and move out of a big city prior to COVID. But now, as we know, our jobs are a lot more mobile, which has really shifted the dial on regional property and its prices, of course. But these recent tax changes, meaning that investors might be out of the mix, those investors looking to invest in what was cheaper regional real estate, it might be a turning point for locals to be able to, afford where they grew up, but at least compete.
It's a problem, the whole regional aspect. I mean, it's been pushing people, unfortunately, out of some of these regional hotspots. They can't afford to live there anymore. They may have been renting. The rents have gone up. If investors can get more rental money, they're going to do it. That's a real squeeze on some of these very lifestyle regional areas. No doubt you've got probably a lot of your friends that may have gone into the regions, may have bought into the regions. And as you say, the whole work from home lifestyle, it has just totally changed the dynamics of the way that the regional property prices are now reflected.
Yeah, I think what's interesting is that, yes, the prices for regional real estate have gone up a lot, and that was off the back of a lot of businesses allowing people to work remotely. But what I see now in a lot of different sectors, this idea of 100% remote working is really drying up. A lot of people, or businesses I should say, are asking for hybrid roles. And that means that the regional real estate kind of gets broken up a little bit. You've got the regions that are close to employment hubs and then those that are not. Australia's a big country. We've got lots of areas that are considered regional that are within a 2-hour commute of a city, and then plenty that are not.
Now, that is sort of a little piece, a little talking piece on the regional aspect. You're sort of drilling into the prestige market as well. And we had these millionaire rows, very exclusive, very luxury pockets of Australia. However, that has really changed now from millionaire rows to billionaire. Quite the change.
That's just it, isn't it? Over the years, or over the last decade particularly, what $1 million means has changed significantly for Australia, and especially when it comes to property prices. I think PropTrack said that the capital city median is now, or at least for the month of May, was over $1 million. So that's the median of what you'll pay for in a city in Australia. So it's not exciting anymore to talk about millionaire rows. We're talking about billionaire rows, and there are a few of them, most of all, mostly in Sydney's eastern suburbs, but Melbourne's claimed a few, and those are really individuals that are willing to pay $50 million or more to get into a property. The only problem is the vendors aren't selling because they don't need to.
Yes, Australia's Billionaire Club, it does expand at one of the fastest rates globally. Currently, Australia ranks 4th globally for billionaire growth, with the population set to grow by 77%, if you can believe that, by 2031. Australia's population of ultra-high net worth individuals, that is people with a net worth of over 30 million US, is forecast to rise by nearly 60% over the same period, putting it in 5th place globally. Global wealth creation. I mean, this has really accelerated as 89 new ultra-high net worth individuals are created around the world each day. So that is a look at the ever-expanding wealth market. We are talking to Kirsten this morning. We'll come back after this with more on our Friday.
Whether you're a seasoned investor or a first-time buyer, know your property with us on the Real Estate Podcast. Every morning from 6 a.m. across Australia, we deliver you the latest property news, commentary and predictions from Perth to Cairns and from Melbourne to Brisbane, 7 days a week.
It is a Real Estate Friday. Kirsten is with us from regional New South Wales. Kirsten, I wanted to talk about the expansion of boutique apartments. This particular market seems to be ever-changing. A couple of weeks ago, we were talking about the cost of providing car parks in apartment buildings. I had no idea just how expensive that is. I think from memory, for a 2-bedroom, it's adding something like $120,000 to your bill, your purchase bill. But yeah, it's becoming very nuanced. It is changing all the time. People's tastes seem to be moving from year to year. Is that something that you've found in your reporting?
Yes, look, in the last 10 years or so, it's been very interesting to see what were the perks in an apartment building, maybe a well-equipped gym for residents or a gorgeous pool with a deck. You know, those are kind of must-haves now. We're talking about buildings that include wellness centres. So they've got to have, beyond the swimming pool and spa, which are now standard, they have infrared saunas or circadian lighting to help with well-being. You don't just have a hot tub now, you've got to have a cold plunge pool and all these things that are included in boutique apartments that we probably just didn't see even 10 years ago. And the appetite is growing for even more wild and wonderful things.
We do a lot of reporting on Aussies heading over to Dubai, and this has been happening over the last 3 to 4 years. You talk about the wellness centres, the saunas, etc. There is just this luxury expectation now. A lot of the developers are just listening to what people want. And I wouldn't mind betting that there has been a number of developers that have gone over to the UAE, especially into Dubai, looked at what those developers are doing, the way that they're upscaling, and have brought it back to Australia.
Yeah, that's absolutely true. I have spoken with some developers and architectural groups who are using the Middle East and even Florida, interestingly, as examples for what they could bring down under. And one particular thing that we haven't seen a lot of in Australia and may well do that other countries are doing is branded residences. We have a few that might hold a hotel's famous name, but we've got several Middle Eastern countries and Florida, and they are covering everything from Maserati to Bulgari to Chanel, Fendi. These are brand names you usually would see on handbags and shoes or cars, and they are putting it into real estate, and people are lapping it up and paying a premium.
And some of these branded residents, they will, particularly if it is a car manufacturer, they will throw in a car as well, which ain't too bad, but mind you, you're kind of paying for it at some of the price end.
Well, absolutely. And what's interesting is, and I think we haven't seen the example yet, some of these brands will put their name to a building for a certain period of time, but they don't necessarily promise that it will always be. That building will be branded with that name. So I think that's really interesting for people who are buying in for the brand, for buying in for that status. But when they go to resell, if the contract is up for brand X, whatever it may be, what will their resale value be? So I don't know. I think Australia might be taking a very considered approach in whether we go as far into branded residences as some other destinations have.
It's a really big talking point and one that is going to develop, I suggest, especially over the next couple of years. Kirsten, some great points there. Enjoy your Friday, and thank you so much for coming on to the Real Estate Breakfast this morning.
No, thank you very much for having me. It's been a great discussion.
Every morning from 6 a.m, we bring you the latest real estate news with diverse perspectives from leading industry experts. We deliver the most property podcasts across Australia every week.
For somebody sitting on the sidelines, especially first home buyers, trying to buy with affordability in mind, what areas and suburbs do you think they should be looking at around the country at the moment?
If you look at the inner urban unit markets of Melbourne, places like Brunswick, Footscray and so on, you can buy a unit, 2-bedroom unit for around $500,000. The same story goes for the growth corridor areas in Canberra.
Name one thing that really, above anything else, you've kind of zeroed in at, you've looked at it and said, yeah, that's a real talking piece right there.
I think the main thing is the introduction of that 5% deposit guarantee without any limit on numbers, without any qualification as to income. It's enabled an enormous number of first-home buyers to enter the market, and there is an upper limit to this. If you look in Sydney, the maximum price cap is 1.5 million. In Melbourne, it's 950,000.
We connect you to the best real estate information across Australia. The Real Estate Podcast.